earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
Good afternoon, everyone, and welcome to the School of Cash Flow podcast. I'm the host, Dale Corpus. So this is a rhetorical question, but have you ever asked yourself, what is your why for everything that you do in your life? I mean, why do you work so hard at your job? Or why do you work so hard in your business? Or why are you even listening to this podcast right now to learn how to, build wealth and, grow your cash flow? And really, there's nobody forcing you to do this. So you're choosing to do what to do, by yourself, and it's fueled by your why. And this burning why is like a life force, and it really comes from within you. And your why really needs to be strong enough to motivate you when the going gets tough and when things don't go as expected, because life has a really funny way of throwing unexpected obstacles and challenges your way. Yet you still pick yourself up because of that strong why, and you persevere and you move on. So what are you doing all this for? What is that why? I mean, so for me, I know I do a lot of what I do. It's for my own family and my kids. I mean, growing up, I was an immigrant myself. My parents immigrated from the Philippines to San Francisco, and I know we were a family of 5 living in a 1-bedroom apartment over in San Francisco until I was about 6 or 7. And back then I thought that was normal. I thought that place was so big, and we really didn't have much. And knowing what I know now, I know that my parents really had the grit and the drive to make it all work. And I really feel that a lot of what the hard work and effort they did just rubbed off on me to create a better life for myself and, and for my family. And now that I have kids, I want to just set them up on the right path and provide them with more options and opportunities that I at the time, didn't necessarily have, and the vehicle I was, that I've been able to do this all with just happens to be real estate, and it didn't necessarily have to be that, but that burning, that strong why within me was always there. And so each of you has a different story and experience to tell, but we're all driven by that why. And anyway, my guest for today is Eng Taing, and he came to America as well as an immigrant. He's really accomplished a lot and has an amazing story. So I'm also curious to hear about his why later on in our conversation. And so a little bit more about him. Eng is the CEO and a founder of Touzi Capital and is an experienced real estate investor with 250 million assets under management. He has over 12 years of private market and real estate investing experience and has focused on cash flow investing to create significant passive income. Eng is an economist by training from the Wharton School of Business, and he also has experience leading data science and analytics at Apple, Capital One, and AT&T. Again, he's got the classic immigrant story, born in a refugee camp in Thailand and finding success in data and math in America. And he focuses on high cash flow investments and providing passive income to investors by acquiring and optimizing multifamily apartment buildings, senior living communities, and Bitcoin mining operations. So without further ado, let's just dive right into this. Welcome, Eng, to the show. How are you?
I'm good. Thanks for having me, Dale. That was a mouthful.
Yeah, it was. It's like, hey, it's all good things though. So for my audience that doesn't, know you yet, can you tell everybody where you're based out of geographically?
I'm in California. I used to be in the Bay Area until I left Apple very recently, and now I'm in San Diego area. Okay. I grew up in SoCal, Southern California, where I started my real estate journey as well.
Okay, got it. So you worked in, obviously you were working in tech, working at Apple and whatnot, and now you transition over to real estate. I'm just kind of curious, how did this progression all happen? I mean, tell me more about yourself, perhaps perhaps your bio doesn't cover.
Yeah, I think if I may, I'll start from.
You can start from wherever you want.
Way back.
Yeah.
And I'll start from not my story, but my parents' story, which is story of escaping the Khmer Rouge and the genocide that happened in being the story down a little bit that happened in Cambodia. My parents are Cambodian. I am Cambodian Chinese, and I was born in a refugee camp in Thailand. I have pictures of me chasing chickens and in a straw hut, and so those are my memories. But their memories are of scarcity and not having much security, both physically, emotionally, everything, and then coming to America when I was 3 years old, and growing up in welfare until I went to college. I mean, so one of what I would say relative impoverishment, but I always think of it as luck. I always think of it as lucky, and gratefulness is how I like to find my younger years, which is I was lucky to escape that. I was lucky to have been raised in America. I was lucky to have the hunger, the need for that hunger as I grew up, because that is what drives me now, and that's what has driven me all along. My big why has always been my family and getting them out of our economic situation, and that's why I've been always focused on that. And taking it full circle to today, this is how I feel about my investors. I always think about how can I help them. Of course, I'm much more financially well off now, and my investors are as well. None of us are in situations that I was in, but it does remind you that things can be fleeting, but security in fashion is paramount to just have clarity of thought and be able to live free. And whether that's having rental income getting you $1,000 a month, $2,000 a month in your bank account, so that if you get fired or laid off or whatever, that you still feel decent about it, or the fact that you grew up like me and you can live off a couple $100s a month, and feel I don't need much, even though I have a lot. Like also another form of financial freedom. So I think I can take it all full circle in terms of my upbringing really drove what I'm trying to achieve now, why I'm trying to work so hard, why I left a nice 9 to 5 to do a crazy 24/7, and everything in between. I'll stop rambling there. I'll let you second.
Hey, obviously, like I know you're working corporate before, and now obviously you're out of that. But even before you did the corporate thing, did you always have the entrepreneurial hustle inside you? I'm just curious to know where did it come from? I mean, I just heard you say that. If I heard you correctly, your family was living on welfare even through while you were up to high school. Is that correct?
Yeah, I did not have a bed to myself until I went to college, and then even when I went back home, I was sleeping head to toe with my siblings back or during summer breaks.
How did you guys make ends meet for you to even able to go to college, for example?
So I remember working. My parents got odds and end jobs. They eventually found a niche in jewelry, and being a freelance jeweler, which is interesting. Being a young kid, we would get gold from or jewelry that people didn't want anymore or were selling, and then we would melt it down. They would smelt it in the 2-bedroom apartment with our 7 people in that, with cyanide and arsenic and other chemicals that needed for that. I'm sure it's the best environment for a kid, but I do remember participating in even helping create those bracelets or those necklaces, with my little tiny hands, and finding as a 7-year-old or whatever how old I was. So that's how they, I think I got a lot of my entrepreneurship from my parents. My dad specifically, he always tells me that he would have been a big shot in Cambodia if if things, happen like it did.
Yeah.
But I think it also, it's a really interesting path I went to, because I always felt I was an entrepreneur.
Okay.
And if you're an entrepreneur, you just become an entrepreneur. That's what people say. But that's not always the path you can choose, or at least you don't feel like that's the path you can choose. I traded magic cards as a kid, and I made a lot of money then. I day traded as a kid. I was really good at math and data pattern recognition, and was early into different things. I played poker, and I made money playing poker. I actually paid my tuition playing poker professionally at Penn. But what was interesting is that I didn't choose to go into entrepreneurship, into more, meaning like creating something for myself. I felt like every role I took was very entrepreneurial. It's different, but you're working for a big company. I worked for an investment bank coming out of college. Not the best time. Financial crisis happened a few years later. I booked $4 billion of subprime assets. I'm sorry. That was partly my fault there. I can see the risks coming up. But it was an interesting choice. I think, my parents were entrepreneur. That was the only role models I could see. I felt like I always wanted to start my own business. But I chose time and time again for security. And I think that was probably part of my upbringing, right? When you don't have much and you have the ability to go and get a really nice paying job with a company with benefits, and your parents, you loom large in your life, you kind of go with that security. That's why a lot of Asians, I would imagine, and all other kinds of folks who are immigrants, gravitate towards those security professional jobs, right? Not security, but like doctor, lawyers, whatever it is that in the mainstream media you would imagine makes a lot of money, which of course, if you really thought maybe it's a real estate guy. But there's no like pathway for that. There's only what you know. And for what we know, math was always certain. You can't change math. If you're an immigrant, you have a lot of disadvantages. I don't really think about all those advantages, but the main thing is that you don't have necessarily the connections to go pursue those corporate paths. So I had to pursue all of them myself. And I think that was entrepreneurial by me, but it was interesting that I always kept choosing. I wouldn't say I chose safety, because I did change jobs quite often. I didn't stay at a job for a long time. And that was, intentional. I was always interviewing. I was always climbing the corporate ladder, becoming an executive at Apple at an early age. I was always the youngest VP or director, whatever it is, at any company, but still at a company. And not until I left that, because I had the financial freedom, because my real estate snowballed to a level where I felt financially capable and able, secure, to leave during, beginning of the pandemic and start what I'm doing now, when my wife is like pregnant, to do all that. I think, not everybody has that opportunity. And so that's sort of, what real estate investing allows you to do, create financial freedom and financial opportunities to choose and do whatever you want, whether it's being an entrepreneur or to relax and hang out with family and support and provide for them.
I find that really interesting. I mean, that the last job that you were at, corporate job, was it at Apple?
It was at Apple.
I mean, I'm only bringing that up because, I'm in the Bay Area. A lot of my clients are working in tech, work in Silicon Valley and whatnot. And it's just amazing. I don't know how old you are, but the fact that you were able to, quote unquote, retire relatively young from, a company at Apple where people are just dying to work for. I have a lot of clients that, that swear by, Apple stock and their RSUs and all that stuff, but like you were able to do to retire the company, and have that comfort level to leave because of real estate. Was it? And I'm just trying to understand how you're able to manage your full-time job and still, build your real estate portfolio. Like, I'm curious to know how that all progressed and like how you're able to manage both of them.
I think that's where I shortchanged myself in terms of that's where my side hustle has always been, real estate. I always loved doing real estate, buying real estate. Every year I would buy real estate since I was 23. Okay. I joined Apple right before I turned 30, and I retired at 35. I'm 37 right now. And I, have been buying real estate since 23, since 2009. And it's always been sort of intentional. Like I never needed to fully commit to a job because I was always really good at what I was doing. And I also knew that I didn't want to just fully commit to a corporate position. In terms of I could do everything well enough and successful enough with the time I could allocate to it, and then spend my side hustle passion. People have passions in like football and sports. I like real estate investing. that's like my hobby. So I've always spent time on that. Every year or every other year, I would try to look at a new place, buy it, refinance the previous ones, take capital out, reallocate, buy again and again and again. And the market went going up. And so that has helped snowball that effect.
Got it. So like, it sounds like you did you practiced the burst strategy, initially, right?
I practiced the burst strategy without even knowing what that was until recently.
Yeah. Did like, how did you stumble upon real estate? Did it find you, or you found it somehow, or like how, like, and secondly, like, what was your first real estate investment?
I've always been attracted to real estate from a cash flow perspective, because I also invest in, I was a day trader. I was in stocks and in equities, and I didn't. And even though I talked about like how I was, playing poker, I didn't love that feeling of risking capital, risking money. And to be really good at poker, you have to just not care about money. You have to be so agnostic, because it's all math. But once you feel it, once you feel like that's like a life, that's like a salary, you just bet, then you can lose. As soon as you start fearing, you lose. Same thing with potentially trading. So I don't do any of those things anymore. What I gravitated towards real estate was the sort of relative predictability of this monthly cash flow and running like a business. And being in the financial world for a while, initially, I saw that things went down a lot and that people were still paying these bills. And so my first purchase was this 3-unit apartment building in the LA area for around $126,000, I believe, 35 something thousand down. And I got, it was only 3 units, 2 was rented. I rented another one after I painted everything white, add some cabinets, put $10,000 into it, got the rent up, and it was good timing, of course. You can never say everything's your success. It's always about timing as well. But took opportunity at timing, and got a really nice appraisal 6 months later, to then do a cash out refinance, and around 9 months afterwards to do my next one. So it was actually producing around $1,800 a month, in gross revenue for the 3 units, off of a 30. It was ended up being around $42,000 in total capex and investment on unit. So really, really great returns, but most importantly, I was able to pull out another $40,000 in around within a year, do it again. And I was working all the time, so I could take that additional capital. And I'm a prodigious saver as well. I just don't spend much money. This is how I grew up. So even when I went to the Peace Corps, which I did as well, and how could I even go to the Peace Corps where I make $100 a month, unless I had real estate, and I was managing remotely. First, I started learning how to manage things remotely as well. But even when at the Peace Corps, I still saved money. So it shows you like I can live off very little. Gave me this sense of this compounding effect that I love about real estate, and that's sort of what I do now.
Yep. I know you chose to, retire from Apple. I mean, did you know you wanted to get in real estate full time, or did that just happen? I mean, it sounds like you work more than you did before, even.
I don't think I chose to go into real estate full time. I think I was always very comfortable with real estate. I always comfortable with real estate investing. What I didn't know, and I more recently learned, was how to develop a real estate investment company. Slightly different kind of things, or an investment company in general. You can buy real estate, you can invest in real estate personally, but how to create a structured investment company so others can invest. A lot of people have always asked me, how do you do it? What are you doing? Can I participate? Can I do this? And I've always said, I'll help you. I can tell you, here's what you do it yourself. I showed them any cube mate or office mate. They almost always end up being real estate investors, sitting next to me for a year to eventually buy real estate. And I really enjoyed that process of explaining and teaching. And at Apple, I helped, lead the Apple Real Estate Investment Club, where I got exposure to a lot of people who were very interested in real estate. And I really enjoy the act of educating, act of, providing value. And that sort of just tied into, I also have these investments that people might be interested in. So that it was a very good relationship.
Okay. So let's talk about, your real estate investing company for Touzi Capital. I mean, like how long has that been around, and what asset classes do you focus on?
It's been around for 2 years, so not long, and we've grown very fast. We focus on multifamily apartment buildings and senior living communities, partially development, partially value add, partially just purchase cash flow. I'm still mostly just cash flow guy. That's how I've always bought. I don't usually buy for appreciation, but in certain markets you have to. And I do have some mixed use buildings and some retail shopping centers, which have been very profitable, especially in Dollar Generals and whatnot. So I know how to handle a lease and negotiate that. And it's all contract-based stuff. And then, of course, now I've expanded our investments to other alternatives besides real estate, which includes Bitcoin mining, data centers, and consumer credit. I did a few, private equity investments as well, and I'm working right now on oil and gas. So I try to sort of take the perspective of being an investor. I invest in everything. I want to have my capital work for me. I want to have great returns, risk-adjusted returns, good cash flow, but I also want to have great tax advantages. And real estate provides a lot of that. And so I've also been a big advocate for that. And a lot of my investments that aren't real estate also have very good tax benefits as well. So that's why I do the things I do.
It's just like, I want to just go back and since Bitcoin and just crypto in general is such a big topic right now, I wanted to just ask you how, like, Bitcoin mining is something that most people don't do, or don't know how to access per se. But like, I wanted to just delve into that. Like, how did you get into that? And what can you explain the difference with what Bitcoin mining, like what it is versus just owning Bitcoin directly or any other crypto type of currency?
Yeah, I've been in Bitcoin since 2013. I've had Bitcoin, and it's done very well. I probably sold more than I should have early on, and I don't remember, and I don't want to remember all of that because probably in the 8 figures of value that I sold prematurely. But we all have the stories, I guess. And I've been personally mining Bitcoin for a few years, so I know the technical nature of Bitcoin mining. It's really just math. Is putting computers to work and powering it with energy, and then creating an algorithm that then produces Bitcoin. That's proof of work. So I've always been fascinated with cryptocurrencies and the blockchain and Web3, and now I'm launching my NFT and doing some DeFi protocols, and I'm very much into DeFi and other non Bitcoin crypto. So I like it all because of the technology layer as well. I'm very much a tech guy as well, not just real estate investment guy. I'm fascinated with lots of things. But from a Bitcoin mining perspective, I think once it hit me that institutional capital started flooding in, which is why you see in the past 12 months this big spike in Bitcoin price and very stable relatively in a year. I mean, for Bitcoin, so obviously it goes up 10%, down 10%. Might not seem stable for most people, but in crypto, that's very stable. And lots of institutional capital coming in meant that it felt like more of an institutional asset and a store of value that could be a great investment source. And so buying and holding Bitcoin could have really good potential benefits in the future. It's great hedging against inflation, all this other stuff that people talk about. But if you're buying Bitcoin, I think if you're interested in buying Bitcoin, I think in mining Bitcoin is actually a better way. So I think it's a leverage way into with good downside protections, because you're essentially buying or investing in computer servers that produce this algorithm, hash power, and that then solves these block rewards. But essentially, you're getting Bitcoin as a result of that, and it's all mathematically determined, and it's kind of predictable. Just like if you had, 5 Airbnbs, you get rent. It's kind of predictable. With enough scale, it's very predictable. And you just buy more houses or whatever real estate, and you just get more rent. And the nature of the algorithm right now is that you will get more Bitcoin than if you were mining it, than if you bought Bitcoin with the same amount of dollars. So it becomes like an obvious choice to do that. Probably more technically hard or unapproachable. It's easy to just go Coinbase and just buy Bitcoin. So I do like to go into spaces where it does seem harder, or it doesn't seem as easy, because then that's where the competitive advantage does lie. And I also like it where you can allocate capital and scale that. Because if you were buying, at least for me, my perspective, not everyone's perspective, if you're going to do anything, think about what did you want to do 10 of it? You want to do 20 of it? I started work doing not single family, but triplex, fourplex. For me right now, it's not scalable. I wouldn't necessarily say, go do that. Because I would say, what's scalable? Yeah, it's hard to scale that up from Bitcoin mining. It's very scalable. It's eminently scalable. And you get better purchasing power and better cost scales when you buy more. And then yes, the economics become better than individually doing it. So I realized that quickly. I secured supply chain. I connected with lots of people in China and lots of people in the Bitcoin mining industry. And I'm relatively still early in this industry. I'm kind of a known player now, but we have 4 deployments, and we're making investors very good monthly returns. Our first fund, we're averaging around 8% monthly returns. So pretty good investment so far. And I do think that it's one of those things where you can also depreciate the asset, right? So people love depreciation.
Nice. So tax advantages exist in Bitcoin mining. Yeah.
Exactly. Yeah. So you get depreciation on the computers, right? It's just like, how does Amazon not pay taxes? Because they use depreciation. They depreciate the data centers, their warehouses, their trucks. And so we do the same thing. We depreciate our computers. They're a productive asset. You can depreciate it.
I'm just curious, because I'm new to Bitcoin mining as well. The topic of this, where is all the mining happening? Is it all through, is it in central area, like in certain cities that you have these computers, mining for Bitcoin? Is it like in certain areas, and like how is it all being powered?
Yeah, earlier this year, the majority of it was happening in China, and then the big sea change was. And why I'm going big into Bitcoin mining is because China banned Bitcoin and Bitcoin mining. and which left a big void where we could capture that market share, and that's been flooding into America. It doesn't happen in cities. It usually happens in remote areas near power, near cheap power, typically renewable power, which is actually cheap, very cheap power. You want to be as close to power sources as possible, because these machines, you can imagine a data center running 24/7, hot, loud, expensive energy. You want to keep the costs down as much as possible. And that allows you to mine Bitcoin. Even when Bitcoin goes down to 10,000, you're still profitable. So, the cheaper the power, the better the returns. Currently, our profit margins are 80% because our power cost is so low. It's like a third the cost of regular residential power.
I got you. And I'm just curious, what are you personally currently investing in, and why?
So I'm personally investing in every one of my deals, but beyond that, I do take some riskier bets in DeFi and Ethereum and NFTs. I've made some pretty good returns off that this year. I still allocate the majority of my assets net worth into real estate. It's still my bread and butter. It's been harder to acquire good cash flowing real estate because it's so competitive in the market. I think I just need to readjust my expectations. I'm used to double-digit returns. It's hard to get those things. I get outbid by $5 to $10 million almost weekly, and it baffles me how people make money. But with the market trending as it is, I can see how everyone's making money, and people are still making good money. If you acquired last year, you're in the money. You're great. It's all about where you're acquiring your acquisition price. But yeah, I'm investing a lot into Bitcoin mining and data centers as well. And I'm also investing in new things that I want to explore and test out before I figure out how to scale it and provide it to my investors.
Okay. And so, what was the progression like? Because you first started off, you're obviously offering syndications right now, but you first started off with the smaller multifamily triplexes, et cetera. How did that progression work? Did you go from just doing investing in, for example, triplexes, duplexes, then you became a syndicator, started a syndication already? Or I'm just trying to understand what that progression was like. How did you, flow from that? Did you first, for example, were you an LP investor first?
Yeah, so I was an LP investor as I was, getting more busy in my life, having kids, getting married, etc. Right? You always trade time or time for money or money for time. And at that point, I just didn't have enough time, and I still wanted to invest. I was always very interested in investing. I got some opportunities to learn from those GPs. I got opportunities to partner with them, and then personally, I started to invest personally in commercial real estate, in bigger size apartments and bigger size, commercial real estate in Middle America. I started to really go outside California starting in 2017, as the market in California wasn't as good, for at least from a cash flow perspective. Obviously, the appreciation's been really well. That's just not my forte or what I target. So I always target cash flow, which meant I had to go to Kansas City, for example, and then into Georgia and Atlanta and Florida and exploring Texas.
Okay. I'm switching topics, just kind of one of the asset classes that I don't know too much about that I know that you offer, senior living. Can we just talk about what you see as opportunities in that space, or and why are you in it, and just elaborate more on it.
2020 was a very good time to buy senior living because COVID impacted senior living assets kind of a lot. But in terms of occupancy and returns, it actually didn't affect it that much. The overall trends of senior living is great. Silver tsunami, old people growing older being a bigger portion of our economy, and they need a place to live. They need a community, and they're used to certain things that the industry wasn't providing. And if you build a senior living community versus an apartment building, you can charge typically 4 to 5 times the rent to multifamily, but your cost is typically 2-3 times. You're sort of like building an all-inclusive resort that you do have higher costs. It's a business still, right? The labor is actually the biggest cost. Actually, one of the biggest pain points now, because labor is obviously very expensive and hard to get. But it's not necessary for assisted living. You don't need necessarily licensed labor. You don't need registered nurses. We do have skilled nurses as well, but then we do get paid by the government. But most of our investments are in private pay, where a resident would come in. They'll stay for typically 28 months versus an apartment building, which is a lot less. And this will likely be the last place they stay. And they will do a financial check that they have financial assets to cover that, and rebuilding these communities that have that support this type of occupancy. And one thing that I like to do is that I want to make sure that we do provide really great amenities because it does scale very well. So you're actually creating really strong amenities and programs, and you have lots of activities, and you keep the acuity for the seniors. And I think that's very scalable. It's a very high NOI business. It's very high operating margin business, as long as it's very much operating business as well. So it's not as passive as real estate or multifamily real estate or residential real estate. Although I don't think that's passive at all, especially if you manage it. But it does have a good moat around it. Like most people won't even think about, I should go buy senior living. So it presents an interesting opportunity where the crowds aren't going. And this is this really great 10-year tailwind of an aging population and a lack of supply, which means that the rents would just continue to go up. And as you build right and you operate right, that's how you create a really strong cash flow. So most of my highest cash flowing investments are in senior living. They are oftentimes close, mid-teens, high teens, cash and cash.
You mentioned, I know there's different types of senior living. Like there's assisted living and skilled nursing, and like independent living too. I mean, like which one of those, I guess, is your focus, and why?
So I've dabbled in all of them, and I do have skilled nursing, which is sort of like an extended hospital, right? That's like if you want short-term stay is really like a hospital, right? You're paying really high costs too, like $1,000 a day. Skilled nursing, you're paying $500 a day, but you're going for 2-3 weeks, maybe doing rehab or rehabilitation. You're getting out of the hospital, you're being discharged. So you actually have this natural flow of like referrals, like people just come in, and that's actually very highly profitable if operated right. Down that continuum, then you have assisted living of people who need assistance to live. They shouldn't be left by themselves, but it's much more like a all-inclusive resort. You don't really have any acute health issues. In tandem to that is memory care, which is sort of Alzheimer related issues, dementia issues, which is about acuity. How can they focus? A little bit more intensive in terms of making sure that they don't get lost, and having staff associated to every one of them, and having them have 24-hour coverage, so that their children, their family feels that they are well supported. That of course their family couldn't support them, not in the way that they need, but it's very similar. And then independent living, which is sort of on the end of that spectrum, which people who just don't really, who want to live in a 55+ community, or have really great amenities and be around other folks like themselves. And it's like summer camp, I believe. I have a very fond memory of summer camp. So we focus mostly on the middle two of assisted and memory care, because you don't necessarily need licenses and other things. You want to support them with registered nurses, whatnot, but you don't need that. There's less administrative burden on that side. I do have all 4 of those in that spectrum. And oftentimes skilled nursing is the most profitable. It's very niche. You have to have that strong relationship with the hospitals, and you have to have pay and Medicaid, which you have less control over because it's still government money that's coming in. You have less control. But I have Section 8 housing too, so I do like government money. It's very predictable. But usually we're focusing in the middle too of memory care and assisted living.
Thanks for explaining all that. Like, again, this is a new area for me. I've yet to invest in anything that's senior living related. Switching topics, just, talking about, you have a lot of experience obviously in real estate investing. But if you were to start it all over again, would you start off, doing it the same way with investing in that first triplex or smaller multifamily, or would you have done something differently knowing what you know now?
Well, it depends. If it was 2009 again, probably same thing. But if it was now, probably not. I'll probably invest as an LP into other investments. I know a lot of my investors do the same thing. Like they invest in something and then they realize it's a lot of work. Let me go into LP, but also be with the mindset of learning, right? I think learning is such a big part of this whole journey. And that's why I focus on education for my investors. Learning is both learning from the failures and the successes you have. And so, when somebody asks me, why should I invest with you versus do it myself? Like, do both. See what you like. I highly recommend people do it yourself. Actively invest yourself. See if you like it. It's not for everybody, but some people really enjoy it more so than even the returns show, right? Like they could be making less money than being an LP in a really nice investment, but they really like it. There's a lot more control too. So I think, and then you're also learning a lot. But I think you can learn a lot being an LP as well if given the opportunity and the time for you. In terms of like scaling, I think being an LP is much more scalable. Going into commercial sooner is scalable. Going into Midwest sooner was more scalable, or not Midwest, but like at least outside California, as I've faced many eviction issues and other things that gives me a little brain damage here. And one story with a rabbit. I'm also selling my properties in California and tender exchange into my deals. So that's also another thing I'm doing. I'm trying to scale my own.
Yeah. That's so funny. I'm curious, like, I know you're not doing this all by yourself. I mean, how do you have a big team helping you? I mean, like, how important is your team to you?
My team is very important to me.
And who are the players? I'm just curious since you're doing so much.
Yeah, so right now I have someone leading asset management, someone leading acquisitions, and this is all in-house, internal. I have a controller. I have a business development for new ventures, and I have investor relations. And all these things that go into being an investment company. But from a real estate side, I also have property managers that I work with that we have. Once I have a good relationship with them, that's just like another person I work with. It's all about partnerships as well. I think we should always think partnering is always better. I think my evolution has also evolved into an abundance mindset. Yep. You can always do more with more people, and give up more is fine because you're going to be doing more, and it's not the last thing you can do. And that's one thing that I would highly advise everybody to think about. Don't think of this being the last thing, this being the first of many, or whatever it is. It allows you to really think beyond just it being in individual vacuum. So that's why I partner a lot in industries I'm not as familiar with, or in geographies I'm not as familiar with. I try to learn as much as possible. I should provide learning and scale as much as possible. But that's where I've been able to scale as fast as I have.
Okay. Biggest mistakes in investing so far? Anything that jumps out at you that you've learned from? And what'd you learn?
The biggest mistakes in investing has usually come from either, there has been some investments where I did not get as much return as I wanted, but the biggest pain point has been always, it's been more work. Because I think time is also an asset that you should capitalize on. And if it takes more time than you expect, then no matter how much return you get, it's not as great. And a lot of times that comes from not having the right partners in place, or not, having reliable partnerships. And so, yes, I'd say go find partnerships and scale fast with them, but learn if that's a great option for you quickly, so that you can know if you're on the same pace. Because if you're at a faster pace, then you might not, there might be the strength of that partnership. And so you should quickly figure out how to resolve that, or extract yourself from that situation, because that would cause future pain points. And for me, that has mean that I had to put more of my time in, more of my resources in some things that I felt like should have been a little bit more evenly spread out.
Got it. I have some final questions for you. What are you excited about right now in your business?
I'm excited about this very large data center I'm building in Ohio. We're going to be putting close to $100 million of Bitcoin mining into it, and probably have a very large, substantial profit. I'm also very excited about exploring smart contracts and NFTs and tokens as part of my online business. I think there's so many layers of what I'm doing that involves contracts, and from both a securities perspective as well as both just negotiating deals, that these technologies have really interesting applications. And so next year I want to really delve deeper into that and apply it for our investments.
Very cool. And what does success mean for you? And you could success can mean anything. I mean, you could answer it any way you want. It means different things to different people.
I think success means helping others achieve their financial freedom, and with their definition of that. And I think it's a lifelong passion of mine to be able to talk to investors, no matter how small, no matter how big, and help guide them, or help give them advice, help them take this money insecurity out, even though they might be making a lot of money at Apple or whatever it is, or they feel like they're not as keeping up the Joneses in Silicon Valley, which making $250,000 a year, you might not feel very well off. It's surprising, I know, but I know I felt that way, and sometimes I know my colleagues did. And you might be working so hard that you can't, put your head above water and figure out I have a lot, or that I can retire, and giving people that sense of calm, sense of, just predictability in this uncertain world. I always think about how I can give my investors a feeling of a warm hug when they invest. And that doesn't mean necessarily the best and highest returns. That means all these other parts of the investment, how to help people out in a way that is meaningful for them. That's what drives me. That's what drove me to be successful now, to do that for my family. And I think of my investors as an extended family, my partners, my friends as well. So I try to figure out how to help them, achieve what I've been able to achieve for myself and my family.
That makes sense. What's your unique ability? What's your superpower that's gotten you so far and contributed to all the success?
I think I've been very flexible and adaptable. I've had so many different jobs. I've moved places so often. You have to be adaptable with change, and not being so hyper focused on one thing, and not being able to be nimble in ever changing markets. It has pros and cons for sure. I'm not saying that there's people who have more expertise in certain areas than me, but I can adapt those expertise, those best practices across many different industries and investments, and be nimble and adaptable with the times, and always be hopefully a step ahead of the game.
Makes sense. And last question, and how can somebody get a hold of you?
Would love if you are interested in go to my website, Touzi Capital, TOUZI capital.com. Sign up to learn about investments, or just reach out to me at Eng, E-N-G, at touzicapital.com. I also have a YouTube channel where I have lots of my education webinars. So you can just Google me. Always happy to connect, talk about real estate, taxes, Bitcoin mining, whatever it is.
Well, thank you. It's I love that you're in the education space, and it shows that passion shows for wanting to, be valued to other folks and, showing them the right way. So thank you for, being on my show today. That's all the time we have. I love your story and I love everything you're doing. It's very inspirational. I mean, I learned a few things about senior living and Bitcoin mining for that matter too. And to my listeners, feel free to reach out to Eng directly if you have any direct questions for him, or check out his website. And thank you, as always, for checking out this episode with School of Cashflow. And remember to leave a podcast review on iTunes, as it helps me attract even more great guests like Eng. So until next time, live life abundantly.
Thanks for listening to another episode of the School of Cashflow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.